number of newly listed homes increased with an 11% jump compared to the final month of 2024. Aside from some of the wild swings seen during the pandemic, this was the largest seasonally adjusted monthly increase in new supply on record going back to the late 1980s. Hey everyone, welcome back to the channel. Today, we're diving into the latest updates on the Canadian real estate market for January 2025. We'll go over key statistics, trends, and what they mean for buyers and sellers. What's happening in the market? According to the latest data, Canadian MLSR Systems saw a double-digit increase in new listings this January compared to December 2024. However, despite the surge in new supply, sales activity slowed down toward the end of the month, likely due to growing concerns over a potential trade war with the United States. So, what does this mean for the market? Is this a short-term shift, or are we seeing a bigger trend unfold? Stay with me, because after covering the national market, we'll take a closer look at the Waterloo region to see how local real estate is performing. Let's get started. Now, if you followed my advice in the past, you know that I usually recommend January as one of the best months to sell a home. Typically, supply is low and sellers have the advantage. But this year, things played out very differently. Instead of the usual early year inventory shortage, we saw a surge in new listings, completely shifting the dynamics of the market. And according to Sean Cathcart, CREA's senior economist, the standout trends to begin the year were a big jump in new supply at an uncommon time of year, as well as a weakening in sales, which only showed up around the last week of January. The timing of that change in demand leaves little doubt as to the cause: uncertainty around tariffs. Together with higher supply, this means markets that had been steadily tightening up since last fall are now suddenly in a softer pricing situation again, particularly in British Columbia and Ontario. So, what does that actually look like in the data? Let's take a look at this graph of residential sales activity in Canada. We can see that sales have dropped to levels similar to what we saw in 2020. That means fewer buyers are closing deals, possibly waiting to see how market conditions unfold. Now, check out this next chart. Residential new listings hit their highest level in January 2025, a major shift from previous years. More sellers are listing their homes, but with demand slowing down, that could mean more competition and softer prices in certain regions. This combination of rising supply and uncertain demand is creating a market that's much different from what we've seen in the past few years. Now, let's take a look at the residential market balance in Canada. On this chart, we can see that the sales to new listings ratio has dropped to its lowest level in recent years. This ratio tends to be lower when we see an increase in new listings, meaning more homes are coming onto the market compared to the number of buyers making purchases. This shift suggests that conditions are favoring buyers in many areas. Moving on to the next graph, we can see the year-over-year change in residential average prices comparing January 2025 to January 2024. British Columbia is in the negative territory, indicating that home prices have declined compared to last year. Ontario is barely seeing any price growth, showing how the market has softened. Meanwhile, the Prairies, Quebec, and the East Coast continue to experience price increases, suggesting stronger demand in those regions. To summarize, the number of newly listed properties jumped 11% month over month. National home sales fell 3.3% month over month. Prices continue to rise in the Prairies, Quebec, and the East Coast, while British Columbia and Ontario remain weaker. With that overview of the Canadian market, let's now shift our focus to what's happening right here in the Waterloo region for January 2025. Now, let's take a closer look at what's happening right here in the Waterloo region. In January, a total of 329 homes were sold in the Waterloo region through the multiple listing service. This marks a 12.0% decrease compared to January of last year and an 18.6% decline compared to the 10-year average for the same month. Here's how sales broke down by property type. 188 detached homes, 81 townhouses, 39 condominium, and 21 semi-detached homes were sold in January 2025. Semi-detached homes were the only category that saw an increase in sales compared to January 2024, while all other property types experienced a decline. Let's now take a look at what's happening with prices. The average sale price for all residential properties in Waterloo Region for January 2025 was $755,159, which represents a 1.0% decrease compared to January 2024. Now, if we break it down by property type, we can see an interesting trend. The only property type that increased in price was apartment-style condominiums. Detached homes, townhouses, and semi-detached homes all saw price declines compared to last year. These shifts in both sales activity and pricing trends tell us a lot about how the market is evolving in Waterloo Region. But what's driving these changes, and what should buyers and sellers expect in the coming months? At the end of the day, the real estate market is tied to the overall economy, and if the economy remains strong, we can expect the market to recover. But right now, there's still a lot of uncertainty, particularly around potential tariffs from the U.S. In his latest speech, Bank of Canada Governor Tiff Macklem made it clear, we can't let a tariff problem become an inflation problem. This tells us that if tariffs do go into effect, the Bank of Canada may be forced to hold off on cutting interest rates in the coming months, something many buyers and homeowners were hoping for. On top of that, many Canadians are facing mortgage renewals this year, and with rates still high, this could be a financial shock for a lot of households. So what happens next? It all comes down to how the economy handles these challenges and whether or not the tariff situation escalates. That's it for today's market update. Make sure to subscribe to my channel so you don't miss future updates. Thanks for watching, and I'll see you in the next video.